XRP. Banks tell us to prepare for this event. People won't see this. XRP Ripple. XRP News. Hello guys, welcome to our channel. Today in this video, we're going to discuss the SEC's lawsuit against XRP, the nature of XRP, and price reactions and predictions related to the lawsuit-induced crash. But before we start the video, make sure to give this video a big thumbs up. And if you are new to the channel, don't forget to subscribe before leaving. Also, hit that big bell icon so that you can be notified whenever we upload a new video.
Do you want to win any of these items on your screen? If so, be sure to watch the whole video, leave a like, and comment the hidden message. And with that being said, let's get right into the video.
For those who don't know the SEC's cryptocurrency-related lawsuit in 2020, the U.S. Securities and Exchange Commission, U.S. SEC, has been tough on cryptocurrencies this year. Earlier this year, sometime in March, the Commission won a worldwide injunction against Telegram's stablecoin, Gram Assurant, disseminating several years of research and innovative progress, even in the absence of fraud allegations. Again in September, Judge Alvin K. Hellerstein ruled in favor of the SEC's motion for summary judgment in SEC versus Kick Interactive. The motion alleges that Kick sold unduly registered securities when it issued its Kin crypto tokens. Both of these cases against Telegram and Kick were filed in the Southern District of New York. Fast forward to December 22nd, the SEC decided to go for another high-profile case. The commission filed its lawsuit in the above-mentioned district against Ripple Labs and its previous and present chief executive officers, CEO, Christian Larsen and Bradley Garlinghouse, respectively, for raising about $1.38 billion through a sale of XRP since 2013. The immediate effect of this lawsuit was brutal on XRP, which dropped by about 25% just 24 hours after the suit was filed. The Securities and Exchange Commission announced on the 22nd of December that it had filed an action against Ripple Labs and two of its excos, who the commission deems as significant security holders, for allegedly raising over $1.3 billion through an unregistered ongoing digital asset securities offering. According to the SEC's complaint, Ripple, Christian Larsen, the company's co-founder, executive chairman of its board, and former CEO, and Bradley Garlinghouse, the company's current CEO, crowdfunded capital to fund the firm's operations. The suit alleges that Ripple's crowdfunding activity began in 2013 from the sale of XRP in unregistered security offerings to investors in the U.S. and across the globe. The complaint also alleged that Ripple distributed billions of XRP for non-cash consideration, like labor and market-making operations. The suit also alleges that in addition to developing, promoting, and selling XRP, which is used to fund its operations, Larsen and Garlinghouse also carried out personal under-the-counter sales of XRP, amounting to the tune of approximately $600 million. The complaint alleges that the defendants failed to meet the registration requirements per the registration provisions of the federal securities law, which puts them in a culpable situation. Stephanie Avakian, the director of the SEC's Enforcement Division, noted that issuers seeking the benefits of the public offering, including assets to retail investors, broad distribution, and a secondary trading market, must comply with the federal securities laws that require registration of offerings unless an exemption from registration applies. She added that we allege that Ripple, Larsen, and Garlinghouse failed to register their ongoing offer and sale of billions of XRP to retail investors, which deprive potential purchasers of adequate disclosures about XRP and Ripple's business and other important long-standing protections that are fundamental to our robust public market system. The SEC complaint was filed against the defendants for allegedly violating the registration provisions per the Securities Act of 1933. The investigation was carried out by Daphne A. Waxman, John A. Daniels, and John O. Enright of the SEC Cyber Unit. The case is supervised by Christina Littman, chief of the SEC Enforcement Division Cyber Unit. Finally, the litigation was facilitated by Jorge G. Tenrio, Dugan Bliss, Miss Waxman, and Mr. Daniels, and supervised by Previ Krishnamurthy. The idea behind XRP was developed back in early 2012, after which the company changed its name to Ripple. The XRP ledger, or otherwise known as the software code, functions as a peer-to-peer database spread across the network of computers, nodes, tasked with recording data about transactions among other requirements. To gain consensus, each server on the network assesses every transaction from a subset of trusted nodes to prevent fraudulent transactions. The trusted nodes are known as the server's unique node loss, or UNL. According to the SEC, between 2013 and 2014, Ripple and its founders sought to carve out a market for XRP by demanding that Ripple distribute about 12.5 billion XRP via bounty programs, which saw programmers earn tokens for reporting bugs on XRP ledger's code. To further boost the circulation and create a trading market for XRP, Ripple distributed small sums of tokens, typically between 100 and 1,000 XRP per transaction, to anonymous developers and others. Then, Ripple executed more systematic actions to boost speculative demand and the trading volume for XRP. In 2015, Ripple began a campaign to make XRP a universal digital asset for banks and other traditional financial institutions to carry out monetary transfers. According to the SEC, to do this, Ripple needed to have created an active liquid XRP secondary trading market. This means Ripple expanded its efforts to create a use for XRP while boosting sales of the cryptocurrency in the market. At this point, Ripple Labs and its subsidiary XRP2 LLC came under investigations by the U.S. Financial Crimes Enforcement Network, FinCEN, acting according to its mandate in the Bank Security Act (BSA). The Northern District of California, in conjunction with the U.S. Attorney's Office, charged both companies for failing to meet the various stipulated BSA requirements, including not registering with the FinCEN and defaulting on maintaining adequate anti-money laundering (AML) and Know Your Customer (KYC) protocols. The FinCEN asserted that Ripple's failure to comply with the requirements opened the door for terrorists and money launderers to use XRP maliciously. However, this case didn't make it to trial, as Ripple Labs agreed to settle the charges by paying a $700,000 fine and update the company's operations to meet the required BSA standards. The out-of-court agreement was announced on May 5, 2015. Throughout its investigation, the FinCEN maintained that XRP was a digital currency, which Ripple acceded to and has since updated its protocols to meet BSA requirements. The SEC complaint noted that from 2014 through the third quarter of 2020, Ripple sold at least 8.8 billion XRP in the market and institutional sales, netting approximately $1.38 billion to finance its activities. Additionally, the complaint asserted that from 2015 through March 2020, while he was the CEO and later chairman of the board at Ripple, Larsen and his wife Lena Lam sold over 1.7 billion XRP to public investors in the cryptocurrency market. The couple was reported to have made at least $450 million from the sale. Meanwhile, from April 2017 through December 2019, while he was CEO of Ripple, Garlinghouse sold more than 321 million XRP that he had received from Ripple to public investors in the cryptocurrency market, grossing about $150 million from the sale. Following the messy lawsuit against the cryptocurrency giant, many exchanges have begun unlisting or suspending XRP trading on their platforms. Coinbase was the latest exchange to distance itself from XRP as the suit drags on. Coinbase listed XRP on its retail-facing platforms in February 2019. However, Coinbase has announced that the cryptocurrency has now been moved to the limited-only section for now and will be fully suspended on January 19, 2021. Paul Grewal, the chief legal officer at Coinbase, wrote in a blog post that we will continue to monitor legal developments related to XRP and update our customers as more information becomes available. Meanwhile, the exchange has assured that users' XRP wallets will still be able to receive funds and facilitate withdrawal even after the full suspension. Most notably, Coinbase has confirmed that its platform will still support an upcoming airdrop of Spark tokens to XRP holders. That said, XRP will remain supported by Coinbase custody and in the self-custodial Coinbase wallet. XRP's price on Coinbase crashed from around 24 cents in the first 20 minutes of the announcement made on December 28th. Subsequently, the cryptocurrency has erased more than 60% of its valuation since the SEC lawsuit was announced last week. Coinbase noted that the reason for dropping XRP as a traded asset on their platform was because, as Ripple sought to IOP, being a platform that hosts something that's a security offering or has the potential to be, would require updating and adding paperwork to make it legal for retail traders to trade. Coinbase is the largest cryptocurrency exchange to sever its relations with XRP following the SEC's lawsuit. This development could spur similar actions among other cryptocurrency exchanges. Although the ongoing debacle seems dire, we believe that there's no cause for panic yet. There's an opportunity here. US-based exchanges delisting XRP was expected, considering that they have a jurisdictional obligation to adhere to the SEC. These exchanges do it for safety reasons. In December, Japan announced that XRP is not deemed a security offering. The UK made the same announcement earlier. That said, we believe that this SEC probe is temporal and Ripple will most likely end up with a fine at most. The case is believed to be of low merit, considering that the SEC did not quantify XRP as a security offering some years back. Nonetheless, the price of XRP will be seriously affected when more US-based exchanges suspend the cryptocurrency temporarily, but we expect full recovery next year when this all blows over. At this point, traders began placing interest in the crypto, which helped it stabilize around 60 cents. However, the news about the SEC lawsuit against Ripple broke and sent the third largest cryptocurrency on a sharp drop to the 20-cent region once again, where it found fresh demand again. Then, the news of Coinbase suspending XRP trading in the coming weeks sparked a fresh sell-off, which took the price briefly below the crucial 20-cent support. That said, speculators expect further downsides in the near term, citing further delisting by exchanges coupled with plunging liquidity as the major catalyst. Already, some large market-making firms that have worked with Ripple have begun cutting ties with the company, which suggests that liquidity will plunge dramatically soon. However, at press time, the XRP market has seen a healthy recovery from its recent foray from the 17-cent low to the 21-cent area. This rebound represents a short squeeze, although it may not last long. Heavy selling pressure can be seen at the 24-cent level, which appears to be a major growth hampering factor for the XRP. That's it for today, guys. We'll see you guys in the next video. Until then, goodbye.